You're listening to Mortgage Lending Mastery. Get the knowledge you need to advance your mortgage practice quickly and efficiently from Jen Duplessis, America's Mortgage Mastery mentor with over 37 years of experience and over $1 billion in lifetime fundings. Jen has been mentoring loan officers and realtors for over 15 years and speaking on stages across the globe. So settle in and get ready as Jen and her guests share their experience, passion, and strategies to help you crack the top producer code to reach new heights in your business. And now, here's your host, Jen Duplessis, Mortgage Mastery Mentor and head chick in charge of Kinetic Spark Consulting.
Hi, everyone. Welcome back to this episode. I am excited today. I'm excited every episode, by the way. I went back and listened to all of my recordings and I say, I'm delighted or I'm excited. I'm really excited or I'm delighted or I'm excited for every single podcast I do. Even after all this time, I'm really excited for every opportunity that I have because I know I'm going to learn today. And I know that those that are listening are going to learn today. So today our guest is Catalina. And we practiced the name we gave up. I gave up. So Catalina with Loan Sense. And we're going to talk today very specifically about something that has to do with student loans. And so if you're a real estate agent and you're listening, hang in because you want to hear this. If you're an entrepreneur, hang in because you may have student loans. You may have student loans that you need to have get restructured, get paid off, have some relief from, and that is exactly what Catalina does. She helps people reduce debt and increase home affordability, and that's really what the key is because we know that's an issue. She helps people save loans, so they don't go away because someone doesn't qualify, and as a result, prevent loan drop off or conversion ratios dropping for loan officers, maintain their pipeline, and increase sales. The thing is, it's not just for loan officers, it's also for real estate agents. So real estate agents need to hear this message as well when they're talking to clients that say, I really want to buy, but instead I'm going to rent because I know I have student loans and I don't qualify. And that's the trigger. That's the trigger they should be hearing as well. So welcome to our show, Catalina. I'm so delighted to have you here today.
Thanks, Jen. I appreciate it. Happy to share.
Absolutely. Absolutely. So let's talk about what you do, because I know it's a plug and play. For those of you watching, I have a piece of hair across my eye and I can't figure it out. But I know that you have a plug and play system that loan officers can tap into for their clients. And, when I think about a plug and play system, it reminds me of credit restoration as well. So I know that you're uniquely different than credit restoration. So kind of walk us through, how do we get engaged with you as opposed to an engagement with credit restoration? And then we'll talk about what you actually do.
Right. Absolutely. So I'll address the concern first on how we're not credit restoration.
Yeah.
So the rising trend of this debt of this generation, those under 45, is high debt to income. And that is the number one reason people are disqualified from financing, which essentially disqualifies them from buying a house and the real estate transaction as well, right? It's actually not due to needing credit dispute letters or needing to restore their credit. It's because they have too much consumer debt. Okay. And that consumer debt comes in the form of credit card, car payments, but increasingly student loan debt. So what we do is we help people reduce their debt to income so they can qualify for mortgage, leading with student loan debt, because there are so many federal relief programs that people can enroll in that will literally reduce that payment and give them interest subsidy if they file into the program. Loan Sense does all of that, right? So we're different from credit restoration because we don't touch the credit report. We don't touch credit repair. We really are a comprehensive advisory solution that is tech enabled to help people reduce the DTI, including student debt and other forms of debt, but leading with student debt because it's the number one barrier for those under 45.
Yeah. So let me ask you about that. Prior to COVID, the average, not the number, but the average consumer had $46,000 in auto loans. No, hopefully they haven't had to buy gas as often, and so they could pay that off faster. Let's hope people did that, you know. Um, so I look at that and I'm thinking, there's probably going to be some type of a shift because of COVID. People maybe don't feel like they need a second car, and so they're selling cars, whatever. What's happening in the student loan and educational piece of this? Because universities, we're hearing it left and right. People, the enrollment in universities is starting to decline, or maybe it's just shifting into distance learning. But where do you see this for the future going? We already have a segment that needs some relief, but where do you see this for the future? Is this something that down the road is going to be a little more diminished, or do you see that it's going to continue to grow because people are working from home and now they say, I actually can go to school? What are your thoughts there?
So anyways, I love that question. The largest segment of consumers with student debt aren't actually people that graduate with a degree. About 15 million Americans go to school, start school, and never get a degree.
Yeah.
So you can enroll for a semester, take 6 credits, get access to student loans, and use those funds for outside expenses that's outside of tuition as well. Like 14% of student loan money goes to alcohol, for example. They did a study. So there's all kinds of things you can buy with living expenses. So what I'm saying is a lot of people get access to these funds and they use it for other things outside of education and may not actually even get a degree. And I'm not saying anything wrong with that. I'm saying the system has made it so that everyone can access these funds, and it's inflating the amount of debt people are taking for an education, right? So the trend moving forward, obviously we're going to have a huge change in the way people think of education. I think there's going to be a huge proliferation of online education. Google recently released 6-month certificates for like project managers, UX designers. So, and Google is saying we're going to treat this 6-month certification like a college degree.
Right.
So I think, and it's $49 a month. So I think what's going to happen is tech companies and other companies are going to come out and say, hey, you could do this certificate program and we'll hire you for a decent wage job. So it's competing with the structure of 4-year degrees. And I think 4-year institutions are really going to have to rethink how they go about educating young Americans, right?
Yeah, because nobody really cares where you graduated from anymore. It's what you can do, and we already know that. It's already, it used to be that way. It used to be, where did you graduate from and do you have the degree? And now it's what can you do? Because we have so many, we have the largest segment of the market being Gen Y, right? And they're giggers, right? They do gigs. They're not so interested in having a real job. They do gigs. So yeah, it'll be kind of interesting to see what happens, moving forward. So I want to talk about this. It was funny. I was on my own. I was like, where was I? I had a workshop a couple of weeks or last weekend, and we had Dave Stevens on, who's a dear friend of mine and was the former CEO of Mortgage Bankers Association. He does a lot of statistical stuff. He was with HUD. And one of the questions that was posed in the chat was about student loans. Do you see that we're going to have any relief with student loans with the new administration and all of that? Because we do have a tsunami of home ownership that's about ready to enter our marketplace in the mortgage and real estate space, and that being in the multi-dimension of ethnicity that's coming in, because there's going to be some additional home ownership relief that comes in for that segment. I mean, just generally it's going to come in, but it's going to provide a tsunami. And so everybody said, well, so this question was, well, that's great. Except that if they still have this crazy student loan, nobody's going to qualify. No one's going to be able to qualify. So it was just interesting they brought that in. And his response was, well, we probably won't see much happening. So that's a good thing for you because now you're a source. Right? You're a resource for people. Thoughts?
Yeah, let me address that. First of all, as an entrepreneur, I don't wish for an existence of a problem to make my business exist. So I want to solve a problem to help people. If the problem's been solved, I'll move on to solve another. That's number one. So the myth that I need a persistent problem to exist as a business is false. Number two, because debt's going to be a problem no matter what. And there's no real comprehensive debt management and debt planning solution out there that's been tech enabled, that's been effective in the marketplace. So that is what we're focusing on. Student debt is not our only concern. Here's the thing, we don't need to wait for student loan relief. There's already very generous student loan relief. That's the thing people don't understand. 2/3 of Americans qualify to reduce their payments once it gets kicked in, by the way, because we're in CARES Act $0 payments right now. If a person works for a nonprofit or has experienced a drop in wages because of this pandemic, basically 2/3 of Americans before this pandemic qualify to reduce their monthly loan payment. And those are programs that are already in existence that Obama put into effect.
Right.
The problem is people don't know what paperwork to file, where to go, and LoanSense solves that problem. We do that all for the consumer. So don't wait on, oh, is there going to be relief? There's already tons of relief, okay? It's just a matter of understanding what relief you qualify for. And that's what LoanSense does. We plug into the lending process, but also we have tools if a real estate agent wants to even put us up on their website as a tool, right? The point is we estimate what that reduction amount is, and then we help the individual manage that loan and share back all the debt to income calculations, even back with their lender, so that the lender doesn't have to understand any student loan policy or mortgage credit rules to be able to help that individual. So I'm saying don't wait for any extra laws to pass. Get relief today if you need it in order to achieve your goals.
Yeah, I think that's great. How does this affect credit generally, scores, et cetera, when you're in a relief program, which, I asked you in the green room. I know that's going to be a question is like, wait a minute, there's got to be a catch here. Whenever we reduce that, it's being tagged on to the end, or I'm going to be shown as being late payments. Help us make sure that we understand that, because if people want to use this program, they need to fully understand how to be able to share this with their client.
Okay, so it does not negatively impact your credit. What it does is, instead of showing the fully amortized amount on your credit report, it shows that reduced payment amount. As long as people, and by the way, it could be reduced all the way to $0, depending on how much you earn. So as long as you're making that payment, you are improving your credit. It's when people can't afford the payment and they don't understand the relief options and they just stop paying it and go into default, which 1 in 5 Americans are doing. That is when it's going to hurt your credit. So by reducing your payment and actually being able to afford the payment, you're improving your credit by about 9 to 20 points over 3 to 6 payments. Of course, once you reduce your loan payment and have funds to pay off other debt, then you continue to improve your credit score. So we're really helping consumers figure out how to get out of a crushing student debt burden so they can focus those funds on other forms of debt that may be higher interest, that don't have federal government relief, so that they can get their debt to income ratio in a standing to be able to qualify in 3 to 6 months instead of 3 years, because they're not able to figure it out on their own.
Right.
And that's what we do.
That's awesome. That's awesome. And I know that, one of the things that you had told me was student debt is the number one barrier to home ownership. 2/3 of millennials have student debt. Consumers are pushing off home ownership 4 to 5 years because of student debt, and 8 out of 10 borrowers are denied a mortgage because of student debt. I want to talk about the consumers are pushing off home ownership 4 to 5 years. What do you see as I'm going to ask you some market things. This has nothing to do with the loan part. But what do you see as the challenge? If we put more people in the position to be able to buy, given the fact that we are seeing, I just talked to a client the other day, they had 56 offers, 56 offers on a home. And that was in Utah. And, what do you see as the challenge for people that want to get into home ownership, but then are challenged now not to be able to get into, are having to go through the process, just having to go through this process and saying, well, gosh, I did all this work and now I can't even get the house I want to do. What is your take on what's happening in the marketplace? It's just a general, what is your take what's happening in the marketplace?
So first and foremost, I just want to say something about the 8 out of 10 people that are denied, not necessarily because of student debt. 8 out of 10 that come into a lender's pipeline don't ultimately leave with an ability to get that financing. And the leading reason is high debt to income. And for those under 45, it's driven by student debt. So it's not exactly
Gotcha.
Okay, so I just wanted to clarify that. From a market perspective, okay, so like every economic equation, right, there's supply and demand. So what LoanSense is assisting, especially moderate income Americans, those are typical users, $45,000 to about $70,000 as an individual, not family earning power, right? So our goal is to help more middle income Americans achieve the dream of home ownership. Of course, we can help those with higher income and higher debt, but our focus is really on this middle income American, because that's who needs the most help right now. There's the supply and demand side. So the demand side, we're helping with the demand side. We're helping prepare more consumers so that we don't have a second class renting citizenship forever, right? Because of the debt burden. Then there's the supply side of housing. What is broken in the US right now, unfortunately, that we're not actively attempting to solve, is we're working on that supply side, demand side of the equation, and not the supply side. A lot of things need to happen in the US, infrastructure and construction, and figuring out how to build homes for cheaper, figuring out how to make homes more flexible to the needs of this generation, which is moving to like smaller size homes because we're having smaller families. There's a lot of things that need to happen on the supply side of housing that we're not necessarily tackling, that need to be addressed. And it's part of the persistent problem. It's just economics, right? If we continue to decrease interest rates, there's going to be an influx of people interested in housing because interest rates are so low. But the supply side of housing doesn't exist. We can't construct fast enough. So it's just that general equation. And while interest rates are low, that's just going to be a persistent problem, right? So how do I address it? I mean, you be prepared, you be competitive, you be an offer that's more attractive, right? Or maybe you just wait and it's not today you're going to buy. Maybe it has to be 3, 6, 8 months from now, right? So I don't know absolutely the answer, but I understand what's happening in the problem.
No, and it's not and I wasn't asking for your answer. I was just asking for your opinion on it. Because I have opinions on it too. I think that, one of the things that we're seeing springing up here in our area is developers buying land. And then instead of developing a whole bunch of houses with driveways, and they do and all that stuff, they're doing little houses, right? Tiny houses in a complete neighborhood. It's like a camp. It's almost like a homeless camp thing. It drives me crazy, but it's like complete neighborhoods of tiny homes, and these are people that are just buying, saying, look, I just need to buy something. I need to get in the game and be part of this. And they're permanent and all that. And it's going to be interesting to see what happens there. I also think, there's going to be a big conversion of commercial into condominiums. I think all these vacant buildings with offices will be turned into, some walls will be knocked down, whatever, and do some condo conversions. Totally different than we used to in the past, where we converted from apartments to. But now we're going to convert from commercial to, because these things are just going to sit there. It's just going to be the craziest thing in the world. Okay, so I'm a loan officer, and I'm hearing what you're saying, and I'm saying, just shut up and get to the bottom line on this. How do I get engaged with you? How can I close more business? How can I get more people to qualify? If I were in those that are listening in here, I'm all about action. So what would I do? One, I would get back to all my clients that didn't qualify. 2, I would share this with my realtor colleagues and my financial planner colleagues, because people that have student loans, a lot of people that have student loans also go to financial planners for advice. So it depends.
And lenders too.
The scalability. And I would do a class on this. Of course I would do a class. I'd do a webinar on it and say, hey, I have something new for us as we start heading into the new marketplace. What am I going to do with you? How do I engage with you to introduce you or my client to you?
Yep. So first of all, we have tons of materials so that lenders, realtors can share on social with their own clients, right? People that they've engaged but denied. If they have an email list, they can use our materials. That's one way. Another way is we also have recorded webinars that we're happy to share, as well as if you have a group of a certain size, we're happy to even do one live and answer questions. But basically, like the live webinar, it also acts as a product demo, right? So those are 2 ways, get our materials, share them, invite a group of your network, right? That helps you, whatever that kind of power core group of people you rely on to close transactions, right? Invite them, your lender, your planners, your realtor colleagues, your lender colleagues, your brokerage, right? And invite us, come to a demo. We're happy to talk about the problem we solve, the tech-enabled solution, and basically we'll work with you, whether you want it to be just a direct referral or whether you want our technology tools on your site and just tech enable the process, right? If you want us to hook into send information to your CRM even, there's like ways we can directly work together or ways that we can just work on a referral basis. So I'd invite you to learn more. And Jen, I believe you have a special link to share that you'll get a special offer if you come through Jen's podcast. And do you have that by chance? I think it's bit.ly/
Oh yeah, we'll put it in the show notes. Yeah.
Okay.
We'll put it in
Cool.
the show notes because yeah.
Yeah. So
I have no idea what it is.
Yeah. So it's just you go to a really short, you give us your email, phone number, and then we book a time with you if you're interested, or we'll just follow up with more information. So
do you keep people updated on what's happening? Do you have a mechanism that you keep loan officers updated as to where, whether the client has entertained that or not?
Yeah. Oh yeah. So first of all, 2 forms of updates. If you join, if you sign up at the bit.ly link, you will be on our email list and we send out information weekly. Also, yes, we absolutely keep you updated by working with you. And as a referral source, we keep leads in your pipeline at all times. That means that you refer them to us for one reason, because they have student debt and they want to close now, but student debt is the main impediment. We can help them get that lower and manage their student debt in about 3 weeks' time. If other forms of debt, it takes longer. But basically what we do is we keep you updated. Like when the debt to income's reduced, like for the lender, for example, we keep them informed. We keep in communication with the lender. So if the consumer gets a session with our loan advisor, we'll even CC any communication to the loan officer if the consumer consents, right? So there's way that we basically keep the loan officer in the loop and help them understand the DTI and the impacts of the DTI once we work with our client.
Yeah. I think this is really interesting because, there's credit restoration where the credit restoration company will keep us apprised of the credit score. Mm-hmm. And what you're talking about here at LoanSense is keeping them apprised. I say like us, like I'm still doing this, apprised of the DTI, position that's in there. Okay, that sounds good. How has the consumer responded to this in the sense that is this? I don't want to talk price, but I want to say, is this really expensive? Is this moderately expensive? Is it
Yeah, we could talk price, but basically, let me just say this. The average student loan savings we receive, if you come to our information session, we tell you exactly who to refer. We save about $600 on average, and we help improve home affordability by about $100,000 on average. So the value is huge because then that $600 can go pay off other debt if they're not ready today, or that $600 can actually increase affordability by reducing the debt to income, right? And we share back all the DTI calculations across all mortgage types, FHA, Fannie, Freddie, VA, USDA, right? So the loan officer doesn't have to guess the policy on what is the credit policy again. We take that equation out. The consumer pays us if they just want assistance enrolling in the program, which is mostly tech enabled. It's like a TurboTax for student loan experience. It's $129.
TurboTax for home loans. I love it.
Sorry?
TurboTax for home loans. I love it.
Well, it's TurboTax for student loans, right?
Yeah, for student loans.
Share back the DTI. Yeah. But we share back the DTI with the lender. And then if they want to speak to a loan expert and get a comprehensive plan, it's $399.
Awesome.
We especially recommend it for those that are in bad student loan standing, like they've had their wages garnished, they're in default, they
need more.
Yeah. Or they work for a nonprofit, government can get a lot of loan relief. We recommend that. Or they are going to get married, want to buy a house, and have no understanding of marriage implications on their student loan payment. Your student loan payment can double or triple if you don't understand, because if you get married and you file your income taxes jointly, now they can count your spouse's income to pay your student loan. So we really help people understand, like if they're going to get married, they want to buy a house, like we're a holistic planner. So even after they close, LoanSense will still be there. So if they get communication from their servicer, they don't understand, they can still connect with us and we'll be supportive and help them with their goals and objectives along the lifetime of their student loan.
Okay.
So it's really a way for you to continue to provide that added support. And if you're a lender and you directly integrate with us and we serve them, we can also share back information on the consumer as long as they consent back with that lender. So if they can refinance, or they're a great candidate to refinance, take money out and pay down their student loan. Those are product offerings most lenders have never even thought about offering. Like, we can point out those candidates. So we have a huge data play with LoanSense and working with lenders so that we can assist more consumers achieve their goals as efficiently and as possible. So that's how
I love that. When you say that 80% of people, or maybe I don't have my number right, but 80% of people were eligible for student debt relief prior to COVID, just generally are. Why wouldn't someone be eligible? Is it if they make too much money? Because, a lot of times, I'm here in the Washington, D.C. area. We have highly paid professionals who have high debt, like $200,000-$300,000 of student loans, and they make 300. So they still need relief. It's a scalable law. I just feel like it's a law of scales, and sometimes it bothers me that some people get relief because they make money less than a certain amount of money. When
there's no income cap. There's no income cap. It's all about debt to income. So here's an example. If you want to talk about high earners, we helped a doctor get $280,000 of forgiveness plus $117 refund from the U.S. Treasury and overpayments. So they qualify based on the debt to income ratio, and they qualify also based on who their employer is, what their profession is. So it's not about the earning potential. Okay. The reason I talk about middle income Americans is because they're the people that a high student debt amount impacts their ability to afford the most. It's not because we can't serve higher earning people. It's just that it impacts their debt to income a little less for the most part because they earn more money, right? Yep. So just to clarify, it's not that higher earning people don't qualify and can't qualify. And to address this statistic, 2/3 of Americans qualify to reduce their payments. It's not that it's lower because of COVID. It's that COVID has put people on zero interest and $0 payments right now. So the impacts on their student loans isn't really felt right now because they're not making payments. Right. But it still affects the DTI, completely affects the DTI, because the DTI still counts that student loan, even if the consumer isn't paying.
Yeah.
Right. So we need to help change and get the payment changed, even if it's officially recorded at zero, so that we can lower the DTI so that people can close. Right. Just to clarify that, right?
Yeah. No, I totally get that. I certainly understand that piece of it. Thank you very much for clarifying that for me as well. So if someone wants to get in touch with you, what is going to be the best way? Now we have the affiliate link here, obviously, and that's probably the best way. And by the way, it's bit.ly/Jen Duplessis. It's bit.ly/Jen Duplessis. But we'll have that link obviously in the notes for everybody. But what is the best way for someone to get involved in this? Is it just to go ahead and go through that affiliate link, and then that'll be the nice portal for you to get some little benefits and whatnot? And that's where they can get the demo if they want to have the demo, or should they be calling you directly and saying, hey, we want to do something in our branch, we want to do something in our brokerage firm?
Yeah, so I recommend going through that link, because then we're giving 3 months of free use of our tools through that link. So that's the best possible way. If you have additional questions, of course, we always want to be available to answer that. And you can email us at sales@myloansense.com, which our partnership and sales team will automatically get back to you. Or you could just text or call us at 734-203-0101. That is our office number. But now, since we're out of office, it's linked to like our cell phones, right? But the point is you can even text it. You can text to schedule. You can email us, whatever format's best for you. But we recommend obviously going to the Bitly link, because then we know that they're tracked to this offer, and we're pretty responsive through that format as well. So we won't forget you. Don't worry.
Sounds good. What would you like to leave us with, if a loan officer and a real estate agent and some financial planner, entrepreneurs listening? What would you like to leave us with today in helping us grow our business.
Yeah. So what I want to leave the lending, the home ownership journey audience, whether you're trying to buy a home, you're helping people transact, is I know oftentimes as people running your own businesses that we often think about, how much money we're making. Did I close this transaction? Did I not? But I always try to remember that behind every denial that a person receives is a human, and a human who is told no without understanding their options is a human that is hard. It's hard for them, and it actually can boost your business if you help give that human. They're a trash funnel in a lot of lenders' eyes and a lot of real estate eyes, like real estate brokerage eyes, right? Because it's about numbers, dollars, and cents. But behind those numbers, dollars, and cents and transactions are humans. And LoanSense can really help, even be on an adverse action letter that denies someone, be a resource of support and help link them back when they're ready. Because the reality is so few people will ever come back to you if you don't provide those additional resources. But if you do, and they remember that and we're connected to you already, we can get them back. That can literally boost your business, and you're just treating them and humanizing the no, right? And so I just want to say, remember, behind every transaction is that human. And some humans need more help than others to figure out how to get back. And our goal is really to help every American, understand the steps to make home ownership possible. And we can't realize that truth if we're not giving people the supportive resources they need to get there. And so
other than just saying no. Yeah.
Yeah. Even I, as a CEO, even though I'm not meeting with people day in and day out like my loan counselors are, I try to listen in to these quality control calls because I want to remember who we represent and who we serve, right? And what we're trying to achieve for them. And so it's huge. So I want to thank you for your work. And I just want to leave you with that, because we just hear stories every day and it's heartbreaking. And we just want to be part of the solution for more Americans to achieve their dreams.
And I appreciate that. And I think that the listeners in this podcast already know that. They know that equity income for them, right? We don't just poo-poo everybody away and say, sorry, we can't help you. Don't worry about it. I mean, that's how we level up and become a master. That's why it's called Mortgage Lending Mastery. That's how we become a master and an expert. We don't just do transactions. We do relationship, right? And ensure that we have that annuity income in the future. Hence the reason that I have you on here, and yet another tool in our toolbox to help make that happen and manifest it. So I want to thank you so much, Catalina, for being with us today. We are so excited to hear what you're doing and all the wonderful work that you're doing to help people out there, but also help people grow their businesses in addition to that. So thank you so much for taking your time today. And we look forward to seeing you on the next episode of Mortgage Lending Mastery. And again, please give us a great 5-star rating and don't forget to do a review. We like those reviews to continually come in. So we'll catch you next time.
Thanks for listening to Mortgage Lending Mastery. Be sure to subscribe to hear more sales tips, ideas, strategies, and tactics to help you with your personal and professional growth to multiply your results in record time. And if you like what we're doing, don't forget to give us a rating and review so we can continue to bring you the best content possible. Wanting more beyond the podcast? Join our Mortgage Lending Mastery membership community, where you will find extended interviews with our favorite guests, weekly training, tips, and insider secrets, fireside chats with Jen, free content, meet, share, and collaborate with other members, and so much more. Click the link in the show notes to learn more about this exclusive content. Mortgage Lending Mastery is an Industry Syndicate charter podcast. Industry Syndicate is the first podcast network specifically for the mortgage and real estate industries. Get the Industry Syndicate app in the App Store or Google Play today.